Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw the buy side has been a bit more dominant, but on the larger time frames, we have some resistance here at 66 to 68 that would have to be taken out in order for the buyers to really start regaining control. So heading into the open, we are going to continue using 66 to 68 as the primary resistance zone on the day, and you can even view that zone as the bull bear zone on the day. So that's the zone that really needs to be taken out, at least short term, if buyers are to regain control. And then beyond that, 74 to 76 is a fairly key zone as well. If we can take out initial resistance and 74 to 76, that would be a confirmation that the buyers are back in control. Below 66, 68, there is still potential for the sell side to step in and push ES back down towards 55.5 to 57.5. And if that zone gets taken out, then we can quite easily test 51 to 52, which is the smaller time frame breakout area from Friday. So it's not really a major area of support. And even 45.75 to 47.75 at that point would be a potential area that the market could retest. So heading into the open, our short-term directional bias is fairly neutral, given that the buyers have been more dominant in the overnight session, but larger time frame. Until we take out 66 to 68, the sell side can actually maintain control, and that's a spot where they can step right back in and push the market lower. So for that reason, heading into the open, we are maintaining a fairly neutral bias, and unless we're seeing strong upside momentum and participation in the other markets, 66, 68 is still a spot where we could see some struggle, and if the market holds below it, then, like I said, we could come right back down into 55.5 to 57.5, the overnight low here. And if we're coming down and we're seeing broad market weakness, or we're coming down on stronger momentum, then we have to understand that the 55.5 to 57.5 is not a larger time frame or major area of support. So it's a zone that at that point would be at risk of being taken out. So right now, the way the market is structured on the larger time frames, sell side can step in and maintain control below 66, 68, and for that reason, we have to use more discretion and read the market more in real time in order to determine whether it's worthwhile to go long at initial support or even at the zones below. Now, on the downside, it's unlikely that we're going to get big liquidation. So 45.75 to 47.75, and especially 40.5 to 42.5 are areas where responsive buyers can still be active. So if we fail at initial resistance, then we're most likely going to simply balance within a range at those lower prices. And even if we take out Friday's low, it's very likely that responsive buyers will step in at 40.5 to 42.5, which marks a larger time frame high volume node, as well as a important breakout area. And in the event of an extreme move, 32.5 to 35.5 would be a spot where buyers could still step in. That's a very high probability zone. So right now, I think the market is kind of figuring out whether the structure on the larger time frame is actually going to change to a more bearish structure, or whether we're simply going to balance and eventually still make our way back up. This market is still in an overall bullish phase, and that's why the larger time frame bias is still marked as more bullish. And for that reason, as we go down into good areas of support, buyers can step right back in. And that's really what kind of builds our neutral bias on the smaller time frames, right? It's kind of this interplay between what's happening really big picture and what's happened over the last couple of days. So, heading into the open, we are open to a move in either direction. How the market behaves at 66, 68 is really going to help determine the short-term bias. Beyond that, 74 to 76 is valid resistance until broken, and that's still a spot where sell side can be active on first test. If 74 to 76 can be taken out, now it would be a confirmation of a change in control, and from there we can go up to 82 and possibly 84 to 86, although that would be quite a range extreme in order to get there. Today so far we're running on lighter volume, which supports the idea of balance. So even if we go higher, 74 to 76 is still a spot where sell side can be active, we can balance again, and even if we break out, we can still see balancing activity. So for that reason, we have to be pretty mindful of trade location on the trades that we take, and make sure that we're not getting involved at the edges, that we're not, for example, buying the market after it's already made a 10 to 12 point swing, to the upside, or we're not shorting the market after it's already made, a 12 to 15 point swing on the downside. So we do have to be mindful of the entry price, the trade location that we're getting, and make sure that we're getting in a spot where our legitimate stop or valid stop can be 2.5 to 3 points, and we can still get at least 2 to 1 reward to risk on that trade setup. And if we're not getting that, then it's going to be best to skip it and be patient and wait for a better trade, because the market's kind of trying to figure out which way it wants to resolve, and it can balance a bit before we get that directional resolution here. So for that reason, we are going to be fairly cautious on our entries today, and continue to be fairly selective within this short-term neutral biased market. So those are the main ideas heading into the open. Let's see how the market behaves and reacts at the initial resistance zone. That's going to help set the tone short term, and from there the expectation is for some short-term directional movement followed by balancing activity. So those are the main thoughts. Let's see which side steps in here, and we'll take it from there.